Hi, thanks for joining me with my market report. My name is Mike, and this market report, if you haven't been to my videos, is regards to mortgage rates. We get into what's impacting them on a daily basis. If you're not aware, mortgage-backed securities are mortgage rates, and they are bundled together and sold on Wall Street. So we do get movement on a daily basis. So even though you're driving along the highway, you see these rates on the signs, doesn't mean you're necessarily getting those because the rates again could have changed. On volatile days, sometimes we see rates change 3 times a day during the day. So with that in mind, we try to give you the factors that go into what's impacting them and where they're going, whether if they're going sideways, upwards, or downwards, what's if it's economic data that's impacting them, if it's sentiment, if it's some headline news that kind of came in or got released and that's impacting rates. And sometimes there's just sometimes no logic behind it. Sometimes just again the sentiment. So we kind of get into that and kind of explore uh, what's ahead of the week ahead, to give you some ample opportunities to make decisions for yourself if you're in the process of refinancing the buying. So that way you can hopefully make an informed decision as to whether if you want to lock your rate or if you want to hold off. Something about holding, one of the benefits of holding off is, of course, maybe rates get a little bit better. The shorter lock period sometimes helps as well. There's the longer you lock your rate, the more costly it can become. So again, this is hopefully something that will be useful for you. A little bit about myself is I am a loan officer. I do work with the National Bank. We are here to assist you in any capacity, whether you get questions about mortgage rates, mortgage programs available out there, the process. Please feel free to reach out. We're here to help. And if you guys are looking to refinance or purchase, we'd like to be able to talk to you a little bit of how we can help you with your needs. We got a lot of great programs. We got great rates. We got great jumbos going on right now, and we got some uh, getting a lot of deals for non-owner occupied, so investment properties, and getting a lot of deals on those because of our rates. But we also got some programs out there, including our physicians loan program for people who are just getting into it. It's great for those who are getting into those fields, whether if you're a dentist or a vet or if you're a doctor, researcher that have an MD in there. We can certainly help you guys out. We got some great programs to help you get into your property. So without further ado, we'll jump right in. We'll start with the economic data. We just basically got one today. We got the weekly jobless claims came up. So the last week's report initially came out at 340,000. However, that got revised higher to 345,000. Forecast is kind of 335,000, and it dipped even further down to 310,000, which is obviously good news. This is the lowest level we've seen since the lockdowns of 2020 and March 2020. So this is obviously very good news right now. And the good thing was, however, last week continuing claims got revised higher, but it went downwards from the revised higher number. It went down to 27.83. So those are something good. We had the 30-year bond auction. This came in very favorably. We had yesterday before I did the video, 10-year, and we got the results back. It came in really well. Bonds improved, and then you'll see here that bonds will improve here as well. So that's a good news for us. One of the concerns is that when they have these, they do mix in corporate bonds, and we were getting a huge supply of corporate bonds, which was kind of competing with the mortgage-backed securities and treasuries, and that was, that affects us. So let's go ahead and take a look at headline news. Stocks are down today. We had an ECB announcement earlier today. Christine Lagarde basically said that they were moderately going to pace their PEP program, which is the same as our package of buying asset purchase buying. They're going to moderately slow down, basically their slowdown. So she's saying it's not a taper, but there may be those who argue that it is a form of taper. So however you want to interpret it, they're basically going to cut down on their purchases through at least the next 6 months through March. So also, there's investors are watching a possible announcement by Biden that he wants to expand the vaccination mandates to more federal employees and potentially those who are work with employees, federal employees. So he wants that mandates on them. So they feel that the sooner we can reopen the economy, the better it is. However, we have our debates out there on that, so we're not going to get into that on this video. We also had a comment by Fed member Williams. He basically stated that the Fed is on pace to taper this year. So now, of course, investors kind of looking at that as well. Before they resigned after the poor jobs data, that maybe they would start the taper next year. However, with the comments like that, maybe he is a voting member. He's with the New York Fed, who always has a seat on the voting table there. Let's take a look, see how this has impacted mortgage rates today. We are getting an improvement. We shot up. We got held back, with the double layer here, the 25 and 50-day moving average. We shot up. We were up a little bit higher. We did go back a little bit, but we're up 14 basis points. So this will translate into better mortgage rates pricing today, which is good news for those who are in the market. We are down again, breaking below that with the yields. Same thing. We had a triple layer. We had the technical level. We had the 50-day moving and the 25-day moving average, and we're down to 1.29 right now on that. So good news overall for those who are looking to refinance or purchase. So rates did improve today, which is good news. If you guys got questions about anything in regards to these mortgage, thoughts about where things are going to go or whatnot, if you guys got questions about plans or we can assist you, please reach out. We are here to answer any questions we can help you with. And if you guys like these videos, more importantly, please smash that like button. It helps us out. We greatly appreciate you guys, your views, and we'll see you in tomorrow's video. Thanks for watching. Bye-bye.